Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Dr. Kim Sei-wan, professor of economics at Ewha Womans University. Dr. Kim, thank you for coming on.
Good afternoon, Devin.
So government ministers today set the direction of economic policy for next year. They're looking at economic growth of 2.4%. That's still quite low, but an improvement from this year. What's your view?
Actually, government's economic growth forecast for next year is a reasonable scenario due to weakened pressure from U.S.-China trade war and UK's Brexit. And also, along with these factors, a possible bounce back of global chip market will recover export of Korea. However, I believe that there will be lots of ups and downs on economic situation next year. So achieving 2.3 to 2.4 level economic growth won't be easy at all.
Well, that 2.4% figure is lower than Korea's potential growth rate, which is 2.5 to 2.6%. It's worrying, though, because that potential growth rate is also falling. Why is that?
Potential economic growth indicates the full-speed economic growth by using all available machines, labor, and technology. So technically speaking, potential growth declines as number of machines and number of workers decrease, which is the current economic situation in Korea. We saw huge investment decrease this year, and population is not growing enough, represented by less than one birth rate. So these are major reasons for potential economic growth decrease, and it is going to be a largest concern in the long run.
Indeed. Well, as you know, think tanks here in Korea are not very optimistic about next year's growth, and they also expect inflation to stay very low. There have been concerns about actual deflation, though. Is that something we should worry about next year as well?
Well, that is a really tough question to answer right now, but according to Bank of Korea's estimation, this year's inflation would be around 1.4% on annual basis, and this is one of the lowest inflation in history. This 0% level inflation is much lower than Bank of Korea's target inflation rate of 2%. As of now, Korean government and Bank of Korea together emphasize that this year's low inflation is mostly due to cyclical factors of the economy. But I think that low inflation of 0% level continues until the middle of next year, 2020. I think that significantly indicates the weak demand of the Korean goods and services. So we have to then worry about the deflation.
Well, you mentioned earlier how Korea's population is expected to start shrinking soon. With that, of course, consumption and production would both start to decline. How would industry and business see that situation, and how might they respond?
Decreasing population is pretty much expected from a long time ago, like from early 2000. But there hasn't been effective measure on it yet. Actually, Korean government has spent over 150 trillion won, or $150 billion for the last almost 20 years for promoting the birth rate without any significant result yet. And also, since population changes very slowly, there won't be abrupt changes in production and consumption. But if that trend goes on, we have to think about the more flexible immigration policy in the long run for avoiding population decrease.
Right. Now, the U.S. and China, of course, have signed their Phase 1 trade deal. Financial markets shooting up on that news. What's the story in the markets today?
Around the impeachment vote on President Trump in U.S. House of Representatives, U.S. stock market is kind of mixed yesterday. S&P went down, but Nasdaq went up slightly. But after U.S. House impeachment vote on Mr. Trump, Japanese stock market dropped by 0.3% this morning, and the same is true for other Asian major markets. However, Korean Kospi has been pretty quiet this morning session. It dropped only by 0.04%, or so that was really a stable market for Korea today.
Got it. All right, Dr. Kim, thanks so much for sharing your insights today. We appreciate it.
Thank you very much.